Well, those are the headlines that we're tracking at this hour. This is the show where our team at CNBC TV 18 gets you the top stories of the day. I'm Arif Sherwani and you're watching Reporter's Diary. Right, so we'll get you all those headlines, but first straight to the market action of the day. So it was a range-bound day of trade which saw the benchmarks beat Monday blues. However, the Nifty is still under 11,600 and the Sensex is below 39,000. And broader markets have underperformed the benchmarks, so the mid-caps ending close to 1% lower, while banks have ended 0.5% in the red. Surbhi Upadhyay is here with the wrap for the trading action of the day. Surbhi.
Well, it was a quiet start to the week, a very range-bound day of trade, but one where at least at the index level, the market managed to hold on to some incremental gains, about 0.3% higher on the Nifty and the Sensex. But that's where the good news really ends. The underperformance on the banks continues, and it was yet another very weak session for mid-caps. We had a very poor advance decline ratio with less than 700 stocks advancing and more than 1,400 stocks on the declining side. The saving grace really was this massive move on Infosys, and that really managed to counterbalance the weakness that we were getting on some of the other Nifty stocks. Let me actually talk about the stocks to give you more color on this. Infosys really took the day away, a 7% up move, fresh 52-week highs. The market loving the fact that the company sounded confident and even increased its full-year guidance. Let's look at some of the other gainers. Even TCS had a bit of a rub-off impact and managed a 2% up move for itself. Sun Pharma, thanks to a Morgan Stanley upgrade, was up throughout the course of the day, 3 to 4% up on that stock. Maruti and Bajaj Finance were some of the other names on the upside. Where was the weakness then? As I said, banks weren't doing too well. In addition, there were stocks like Indiabulls Housing, L&T and ITC. And the selling on a couple of the bluest of blue chips like Titan, that continues. That stock was down another 2% today. Quick word on the mid-caps and some of them that are hitting the headlines. DHFL, for all the wrong reasons, that massive loss and the auditor comments, down about 25% in today's trading action. Allahabad Bank lost about 8% because of the Bhushan Power fraud that's now come to light. Piramal Enterprises saw a big up move because of reports that suggest that SoftBank could be coming in with a big fund infusion. So that was a mover on the upside. Speaking of upside, today's good result, shining star definitely was Avenue Supermart. Great numbers from DMart and investors lapped it up. So stock-specific action continues, but overall at the index level, we are absolutely range-bound.
Right, Surbhi. Many thanks for getting us all those details. But let's also get you a CNBC TV 18 exclusive. So we learned from sources that the Department of Economic Affairs, the Direct Tax Board, as well as market regulator SEBI have all discussed the impact of the surcharge levied on foreign portfolio investors. However, it seems that there is still no relief measure that has been proposed yet. Timsy Jaipuria is here with all the details from there. Timsy, what are you picking up?
Well, as you guys said, a level of discussions have already stakeholders trying to see and ascertain what exactly is the situation right now when it comes to surcharge on FPIs. Also, very clearly, DEA, CBDT and SEBI in these meetings have discussed the impact of surcharge on FPIs. And however, Revenue Department has reservations on the special carve-out, and government feels that to be precise, Revenue Department rather, is apprehensive of a carve-out for FPIs as individuals, HUFs and AOPs are treated together under various sections of tax law. And Revenue Department feels that a carve-out for FPIs would lead to complexities they do not want. Also, Revenue Department feels that if a carve-out is made, then FPIs will have to deal with a strict anti-abuse measure, which will also be thought about. So right now, the talks are on between government and the stakeholders, but yet no specific proposal on relief for FPIs is made as yet. Nothing is on the table. It's just
Right, Timsy. We seem to have got most of the information from there, but there seems to be a connection problem with the connection. So we'll try and connect in detail. But many thanks for joining us with all the details from there. But in the meanwhile, let's also take a look at some other stories that we're tracking. So investors have punished the debt-ridden DHFL stock after the crisis-hit mortgage lender reported a 2,200 crore rupee loss in the first quarter. But it wasn't the earnings alone that ruffled feathers. among investors. The notes to account have also indicated that bad loans could increase, and those note to accounts point out various lapses in documentation of loans and questions the company's ability to stay afloat. In a statement, the company believes it remains strong and solvent and hopeful of a resolution without any haircut to lenders. Lata Venkatesh is here with more details on DHFL's troubles and if the company can dig itself out of the hole it finds itself in. Lata.
Well, the numbers of about 2,200 crore losses for the fourth quarter and NPAs going from 0.96 to 2.74% is not what has disturbed the street. The 30% cut in the stock, or near 30%, is because of the notes to accounts, which is saying a few things. It says that the procedural lapses and the end-use question marks of some of its loans, which Cobra Post alleged, are still not entirely resolved because replies are expected from some of the borrowers with respect to the end use, and they have not been received. We don't have any idea of how much is the amount of loans involved. With respect to intercorporate deposits, some of them have been converted to loans. Some of them, about 4,000 crore, have yet to be paid, but the company is expecting it. There are lacunae in some documents, which one of the notes to accounts acknowledges, to the tune of about 20,000 crore. The company says that no adjustments are needed, but we have only the company's word for it. With respect to some other loans, about 16,000 crore of loans, they have got interest rate checks, interest payment checks of 1,875 crore, but they didn't bank them, obviously because they were not sure it would be honored. Now, taking into account this 16,000 crore and all their other developer and SRA loans of 34,000 crore, they have written the value down as fair value to 31,000 crore, and that 3,000 crore odd has been provided for. That accounts for the loss, the company says. But all this has been signed by the company and not the auditor, which is why probably the markets are worried as to what will the auditors say about these numbers. As well, the company says that its ability to go on as a going concern depends on further asset monetization and more money coming in from banks and or investors. That line also could have worried investors. DHFL has clarified, saying that the management notes actually show our intent to be prudent and conservative, and they say that they have withstood a lot of pressure and remained solvent. They have paid back 41,800 crore since September 2018 when trouble began, and that they are working closely for a resolution with the stakeholders. This clarification has come from DHFL. From the bankers, we hear that they are going to hold a larger meeting with mutual funds and NCD holders as well, because if there is a haircut to be taken, all those who have provided credit may be asked to take it. The last meeting was also held with mutual funds, but only some mutual funds. Now maybe the larger body of those who hold debentures will be called. Expectation is that a deal will be finalized by July 25th. And the audited reports are expected to be submitted on July 19th.
Right, Lata. Many thanks for getting us all the information from there. But moving on to the automobile sector, where the slowdown in the sector is clear and present. So commercial vehicle maker Ashok Leyland has announced that its Pantnagar plant in Uttarakhand will be shut from the 16th to the 24th of July due to weak consumers' demand. And CNBC TV 18 learns from sources that Tata Motors will also be shutting its plant for 2 days in July as well. Alisha Sachdev is here with more from there. Alisha, can you take us through the details of these production cut plans by both companies?
Right, Hareep. So this is actually not anything new. Remember that last month as well, on the back of skidding commercial vehicle and passenger vehicle sales, most manufacturers had actually undertaken production cuts. That continues in this month. And Ashok Leyland, in fact, has taken a production cut of around 12 days from July 11 to July 24 at its Pantnagar facility. Not only that, we're learning from Ashok Leyland that the company will observe about 4 to 5 days of temporary closures across all of its plants. Remember that in June, on a year-on-year basis, sales for Ashok Leyland in the CV space had fallen about 14%. Now, not only that, the largest player in the CV segment, that's Tata Motors, that the company has also taken production cuts there. 2 days of closures is what will be observed in the month of July. That's on July 13th and July 22. This is also in the commercial vehicle plants that Tata Motors has in Pantnagar. Tata Motors, remember, has 6 facilities, and all of the plants manufacture passenger vehicles and CVs both. Speaking of speaking of passenger vehicles again, remember that last month 27% was the extent to which PV sales had dropped. Tata Motors has been undertaking staggered production cuts in the PV space as well to sort of adjust to the market demand. In a statement to CNBC TV 18, the company did tell us that the overall CV industry has seen a softening of demand, although the production that is happening at their manufacturing locations are as per plan, which are in turn aligned to the market demand. They also said that the few days of the month are also being utilized for planned maintenance activities. Now, Volvo Eicher, which is again an important commercial vehicle manufacturer, said that they are not going to shut down any plants this month, but they have indeed undertaken production cuts to adjust to market demand. And of course, there is an across-the-board slowing down in the CV industry, and Mahindra as well undertook production cuts of about 5 to 6 days last month. And Pawan Goenka, too, in an interview to CNBC earlier, had indicated that the company will not rule out further production cuts, although the month of July for M&M does look better. Arif.
Right, Alicia. Many thanks for getting us all the information from there. So there you have it. Clearly an inventory build-up at automakers, prompting them to shut down their plants, at least Ashok Leyland being the latest one, to shut down its plant for around 9 days in July. Let's also get you the latest from the steel sector, where the Bhushan Power and Steel case. So National Company Law Tribunal, or NCLT, has directed that the forensic audit report of the company be shared with JSW Steel. Now remember, JSW Steel was the highest bidder for Bhushan Power, and with its 19,700 crore rupee resolution plan, in fact. Ashmit is here with the details of today's developments. Ashmit, what does this mean? In fact, does this mean that JSW Steel could be developing cold feet?
Well, are they developing cold feet? That's a question that they will have to answer. JSW will have to come out and answer. But there is definitely some cause of concern that we can say with some degree of certainty. Let's understand the perspective as far as today's developments are concerned. Keep in mind that it was in the month of April that NCLT had reserved its judgment with respect to JSW Steel's bid for 19,700 crore rupees for Bhushan Power and Steel. It's been pending for nearly 3 months now. And it is in this interim period that there has been an interesting development. In fact, happened very recently. Earlier in the month of July, we had PNB come out on July 6th to be specific, whereby PNB admitted that they had conducted a forensic audit, and that audit revealed that in fact there had been bank fraud, that as much as 3,800 crore rupees had been siphoned off by Bhushan Power and Steel. Subsequently, on July 13th, which is more recently, Allahabad Bank also came out and they said that we've done a forensic audit as well, and our auditors are telling us that as much as 1,800 crore rupees had been siphoned off by Bhushan Power and Steel. And it is in this perspective that today's petition of JSW Steel needs to be seen. JSW Steel had moved the NCLT, whereby essentially they were seeking copies of these very forensic audits. Now, what's interesting is that while they were seeking copies, the lenders were also present in court today. They said that they'd be more than happy to allow these copies of forensic audits to be served upon JSW Steel. And they added in lighter vein that as they would provide the copies as long as JSW Steel is not backing out. And to that, JSW Council responded by saying that they have no plans to back out so far. The operative word there being so far. So interestingly, as of right now, NCLT has allowed for copies of these forensic audit reports to be made available to JSW Steel, but certainly a cause of concern there for JSW Steel and its bid of 19,700 crores for Bhushan Power and Steel.
Right, absolutely, Ashmit. Lots of nuances there. Many thanks for joining us with all the details. On that note, we'll slip into a short break. Coming up on the other side, FMCG companies plan to make a joint representation to Food Safety Regulator, FSSAI, on the draft labelling norm.